Welcome back, guys. Nice to see you with another edition of DCA. I've got CTO Larsson and I've got James from Invest Answers. We do have a jam-packed show for you guys today because, as you can see, we were planning on talking about whether Bitcoin can get to 50,000 in 90 days, which we had a good case for. But now we started to see a slight pullback. And I think a lot of people are getting the pre-FOMC jitters, which are normal every single time. So I think what we should talk about on the show, we should talk about the pre-FOMC jitters, what we can expect from the FOMC. Then we should probably look at what realistic price targets are for Bitcoin. Then there are a whole lot of other narratives which I want to talk about. For one, I want to talk about Aptos because I think that this thing deserves to be shorted. And I want to hear your views as to whether this thing deserves to be shorted. There's also a massive layer 2 narrative, which has sprung out in the last couple of days. I don't know if you guys saw, but Matic, Mina Protocol, Metis all started to jump up. So let's talk about layer 2s and how to invest in ETH layer 2s. And then from there, we'll take our cue from the audience. We've got a live chat here. So people are saying Ran is closing his longs. I'm not closing my longs. I'm actually opening shorts. We'll talk about those as well. Cool. So nice to see you guys. Welcome back, James. Welcome back, CTO.
Thank you. Great to be here.
Good to be here too.
Greetings from my kitchen.
So, oh wow, yeah, you're at home because we've moved the show a bit later to accommodate all of our schedules. James is traveling. Our channel has just got too many shows at the moment, so we decided to bump the show up. Anyway, if you are new to the channel, subscribe to the channel. If you're a subscriber of our channel, subscribe to the channels, to James's channel and to CTO's channel. Also, like this content because this is kind of an unscheduled time. So if you like this content, it helps the YouTube algorithm know that we're here and we're doing a good job, or a reasonably good job. All right, let's go, guys. So let's talk about FOMC this week. We've got Powell between a rock and a hard place. On the one hand, inflation is coming down hard, and therefore the market is kind of expecting him to raise rates by, I mean, I don't know if you guys saw this, but let me just refresh this. So there is now a 98.1% chance that he's going to raise rates by 25 basis points and a 1.9% chance that he's going to raise rates by 50 basis points. Now, this was slightly different earlier. Earlier, it was a 99.1 and a 0.9% at zero interest rates. So obviously, with the markets coming down today, I don't know if you saw, but the US stock market's taking a little bit of a beating. That's why crypto's taking a bit of a beating. I guess the market's getting the pre-FOMC jitters. What do you guys make of this FOMC that's coming up now? CTO, let's start with you.
Thank you. I'm really actually looking forward to hearing James's take on this one. But let me share two things here. If I just quickly share my screen. And it's really an amazing tool, this one that you showed, where we can really see what the market thinks about these probabilities. And if anyone has missed it, there are tabs up here. So you can see that this is what they think for February. And then you can continue clicking here. You see what market thinks about what happened in March, in May, in July. And basically, it's all the way here, it's the same. The market thinks that what will happen here in February, tomorrow, 450 to 475, that's what market thinks all the way. In March, in May, in June, in July, in September. See here, it's still the biggest bet. In November, and then in December, the market thinks that, no, actually, it is still, now it's the same. It was different here in the morning, actually. So market thinks that the Fed will stop hiking the rates after tomorrow. So I feel that this is an amazing tool, and I have never seen it so sure of what will happen tomorrow as now. It's like 98% think the same thing. And usually market participants are in disagreement, and that's not what we're seeing here. So that will be super interesting tomorrow. And then, on February the 1st. And then another thing that I want to draw attention to, this is a chart that I really like. It's the dollar currency index, or the dollar strength index. And it seems very dramatic today. A lot of things have changed. But if you look here, nothing has changed. What has happened is that from mid-2021, this has gone in a straight parabola up, which broke in November. And since then, this is in a channel down, meaning that dollar strength index is getting lower and lower in this channel. And that typically means that speculative assets like Bitcoin or tech stocks are going up. And just because there has been this spike here, like today or yesterday, that's just a bounce up from this channel bottom. You can see it here. You don't need to know any technical analysis to see that this is still in this channel, even though it has bounced up a little bit today. So I don't see any change in the trend, even though we have this slight bounce today. We'll come back to Bitcoin later, but just this is what I observe from the macro. And now I really want to listen to James, what you think of this.
James, yeah, I must say, I'm pretty keen to hear your view here.
Well, first of all, it's comical to think that the Fed controls inflation. All they control is demand, and they can destroy demand. That's, first of all they can do. There is a lot of fear out there in the marketplace. They're predicting a bloodbath ahead of the Fed Monday. So the sentiment, again, as of last week, as is this week, it's extremely negative. Now everybody's saying, well, the market's run too far, too fast. It's been, record-breaking January for Bitcoin since 2013. Same with the stock market. It's been up over 5%, which typically bodes well for the rest of the year. But whether they raise 25 points or 50 basis points, it makes no difference at this stage. All the damage will happen over the next 4 to 6 months. And that is the problem. People think, well, JP, he controls the price of oil and then controls the price of eggs. He doesn't do anything. And that's the crazy thing. So I think it's going to be a classic case of kind of, sell the news, buy the rumor type of thing, or backwards, because we're selling off before the news comes out. And I think the markets will rally after, but it all depends on his words and what he actually says tomorrow.
When you look at Bitcoin's performance and the market performance in January, there's two ways to look at it. The first thing is that it comes back to mean reversion. So you'd say, listen, if Bitcoin went up 37.02% in January, then we kind of hope, you kind of expect that mean reversion would mean it would come down in February and March. But if I look historically at months where Bitcoin has, like 2013, where Bitcoin overperformed in Jan, the continuation happened in Feb. So the question for me is, when you talk about mean reversion, are you talking about, do you think Bitcoin was under the mean and is now catching up to the mean? Or do you think that we've overshot in January and therefore some kind of mild pullback will be okay in February?
Well, I think you got to look at the money flow. And there is a lot of money flowing into Bitcoin all of a sudden. And all the cohorts have been accumulating in January. And again, it goes back to the scarcity of Bitcoin. There'll come a time when people will get very alarmed when they see how few there are left, how that, nearly 70% hasn't moved in over 2 years, all that other stuff. That point is going to happen. I just don't know when. So when people talk about the feasibility of, it bouncing to 50K in a couple of months, theoretically it's possible, but I think it's very unlikely. But I wouldn't be surprised if we saw 30K sometime between the end of Feb and March, though.
Okay, so that's probably a good way to start our next discussion, which is we told the audience we'd discuss whether 50K is possible in the next 90 days. How do you see the next 90 days playing out? CTO, I know you want to talk some charts, and I think you've got some really your magic charts or your magic potion charts. I love the charts. So maybe let's start with the charts, and then James and I can hop in from a fundamental point of view.
Thank you. I'm very excited. Thanks for this opportunity. So here we have it. Here we have the Bitcoin chart. And like I said before, I think this dump today that feels very dramatic. Zooming out, you can't see it, right? It's like this tiny, tiny, tiny little blip over here. I think that is insignificant. What is significant instead is this, that we have had a trend reversal. And now we're very close to the first real resistance, which was the high from mid last year. That was when, as you remember, from June, July, August, price went up, but it kind of went up in a downtrend, and then it hit resistance, and we've been down ever since. Now price is almost up at that first resistance, which is, from mid 24,500 up to about 25,000. So price almost got there.
Coincidentally, I just want to talk about that specific level coincidentally, because that for me is a much bigger level than you're making it out to be. Yes, it is a horizontal support, but there are two other supports that are happening there. And I think Benjamin Cowan alluded to this. It's a 200-week moving average and the 50-week moving average. And if you look more or less where the 200-week moving average is right now on Bitcoin, I'm going to zoom out to that just to make it a bit easier. You can see that it's about the same level. So you've got at the 200-week. And at the same time, the 50-week moving average is now heading towards that exact same spot. So to me, that's...
Absolutely. There's even more, actually. So there is so many. There's the horizontal level, which is kind of what I go for. There's also the volume node. If you look on the right side here, you can see at which level price has been, most volume has been traded. There's a volume node here around a little below 25,000, 23,200. And we have the major resistance, and we have the moving averages that a lot of people are following. So we're hitting up against that resistance. And what will happen from here is really key. I think what happened today isn't a significant event. Today, stock markets are down. DXY, dollar strength index, had a recovery. Then, of course, Bitcoin goes down a little bit, but it's insignificant. But if we zoom out even a little bit more, and you look on the right side of the chart, I hope everyone can see it. What you can see here, that if we cross this level, if we get through all the resistances here at the 25,000, the moving averages, as you say, the horizontal level, the volume nodes, if we get through that, there is nothing from there all the way up until maybe 28,600, 28,700. If you look on the right side here, there was no volume traded there. That means that there's very little resistance. So if we break through this zone here, which we could do in this move, I think we bounce up almost immediately, up almost to 30,000 and consolidate there maybe. And then we take it from there. But that's really what I'm looking at. If we reject here at this key level around 25,000, well, then maybe we're in for a longer consolidation. And I don't know if it's visible here on the chart, but if we retrace a bit from this level here at 25,000 and then move back up, then this becomes an inverse head and shoulder. Here is a left shoulder, here becomes the head. And if we do like this, that becomes the right shoulder of an inverse head and shoulder. So if that happens, and then we break through, we get two more great entries. We get an entry when this shoulder turns around. We get another high confidence entry when the neckline breaks through, whenever it does. And those are high confidence entries, guys, in an uptrend and inverse head and shoulders in the chart. Those are great entries where I usually trade spot, but here I would probably enter with leverage because that's such a high confidence entry. If we break through now, okay, we don't get those entries then, but I would guess that we would quickly jump up here to 28,000. What happens from that, then we have to take when we get there, but it's a very key point in the chart here. And I'm super excited. This is looking better than it has done ever. Both of you alluded to that we have inflow in the market again. And I'm super excited, super happy. Those are the two main scenarios that I'm looking at. Either we break through this, then we jump up to maybe 28,700, or we reject here at resistance and we make a right shoulder, and then we have more great entries to look forward to. Those are my two main scenarios, and both are very bullish. Then if something else happens, okay, take it from there. But those are the my two main scenarios right now.
Okay, cool. So I like your scenarios. They're both bullish scenarios. I didn't hear any bearish scenarios. I heard either straight up or I heard an inverse head and shoulders. Both are good patterns for me.
Yes.
I must say, I think I'm buying the inverse head and shoulders. I'm not a chartist, so for me, I'm looking at it from a fundamentals point of view. And I think from a fundamentals point of view, I'm buying the inverse head and shoulders because that lines up with the fundamentals for me. We'll talk about that in a sec. James, what do you think of that analysis, and what's your analysis of where this thing's going?
Yeah, I think there's two things that are driving the market right now. One is the money flow coming in, especially from institutions. And that's there. You see that from all the cohorts, especially the bigger wallets. And the second thing is the manipulation is still happening. Like you saw the pump yesterday up $1,000, nearly to 24K, sold off right at that level, straight down to 23K again. It's like, and now it's just a second sell down, but it wouldn't surprise me if we're back at 23K within a couple of hours again, because there's people just playing with volume right now, dumping, driving demand, playing with the market, stopping people out, taking their money. It's back to the old days of what happened in 2020, 2021.
But much harder to manipulate the market now. Much harder to manipulate the market now because
well, it's not because the bounce on exchanges is so thin. So liquidity isn't there on exchanges. Maybe Binance one exception.
I'm gonna push back there, and I want to show you why. So I saw some tweets in our research group earlier, which analyzed the inflow onto exchanges, and I think if I remember correctly, the balance on exchanges is actually higher than it's been in a long time. I'm not saying it is at its peak. I'm just trying to find the data, but I know that it was higher than it's been for a long time. Yeah, okay, I can't find it here. I'm not going to spend time looking for it, but I did see that the balance on exchanges is quite high, and the volumes are also very high. So for me, it's very hard to manipulate the market when the volumes are high and the data on exchanges and the balance on exchanges is very high.
I think it's still possible. Like the levels yesterday were just uncanny, what they hit and where they went down to. So, but we'll see. But there is an awful lot of perp action as well. I think open interest in perpetuals is like at 2-year highs, and some of the options action is at all-time highs. So that's been pretty impressive as well. So the question is, where is the money flowing? And the guys that are buying perps are probably manipulating spot or vice versa.
So yeah, the perps level is back to where it was just before FTX. So it was, you see that's the level on November 5th. If you remember on that day, we were getting a bit of a pump. So you remember when FTX was during Solana a break point, and we were just on the way up when we were getting a beautiful pump, and the open interest was opening, and then bang, we got the FTX collapse, which flashed out all the leverage, and you can see that. Hold on, let's just open it up here. You can see that all the leverage was flashed out over here. You can see that green line over there, and then we're back in business now. Hopefully we don't get destroyed again now, because we're kind of back in business now. All right, yeah. I mean, look, my view is, I think I actually buy into this analysis over here, which was done by Jason Pizzino. Now, I'm not really looking at what he was talking about. He was using a certain, I think it's called the GAN multiplier or something like that, which is a very technical term. But I think he sees it in 3 different phases. I think the first phase he sees is the red phase, which is the downtrend. Then he sees the black phase, which is the accumulation trend, the downtrend over, but a slight uptrend. And then the third trend is the aggressive uptrend. And I think that I agree with him that where we are is we here, and we need to get confidence back into the market. I don't think confidence is going to come in immediately. And I think that once we get the confidence back in the market, we may go into one of these green zones where we actually go up, as much as people don't believe it. As much as people don't believe it.
The middle section doesn't make sense. In fact, if you overlay this with the rational root version with the halvings, it's kind of similar, except for the middle part is off.
Yeah. I agree. Look, the halving, I mean, we are now at 68% of the way to the halving, and that's traditionally quite a good measure of the bottom, right?
Yep.
Yeah, exactly.
Yeah, in fact,
the bottom has often come quite long before the new all-time high, like 1 or 2 years before.
And I think in terms of halvings, I think maybe 5% of people understood it for the second cycle. I think maybe 25% of people understood it for the third cycle. This time around for the fourth cycle, I think 50% plus get it. And now it becomes a question of, that's the one. Now it becomes a question of who is going to front run the halving. And I think a lot of people will. They're not going to wait till April or March 2024 to do it. Now they could run in. This is where it breaks down. You see the middle of that chart after the 68%. This doesn't agree with Pizzino's chart.
It breaks down. Let's quickly just overlay that with Pizzino's chart. Okay, so that's the one. And then I think that's the other over here. Okay, yeah, there is a bit of a discrepancy. All right, listen, let's move on and let's talk about.
Can we just clarify one thing, which is really good that you both said? I take the chance to share one more time here because it's a good education for everyone. So this time there actually was inflow. Inflow means that there is actual money coming into the market, and the news articles that you referred to talk about 117 million. And that is actual inflow of money into these investment providers, which this article provided to. But here a lot of people are confused, and a lot of news articles are saying that it's hundreds of billions going into the crypto market. So why is there confusion? Because if you look in the total market cap here, we see that this goes from like 900 billion up to 1 trillion. So that's 100 billion. Why is this article talking about 100 million? That's only thousands. So here there is a great opportunity for quick education that the market cap going up by 100 billion does not mean that it's 100 billion money flowing into the market. Market cap is just last traded price times the circulating supply. And especially in Bitcoin, and even more so in altcoins that we will talk about next, it takes quite little money to move the price a lot. Of course, that article was talking about specific investment products. It's not talking about the Bitcoin, spot Bitcoin, because there is probably more money flowing in. But it is a huge difference between how much money is needed to move in and how much the market cap goes up. And this is, a lot of people are confused, a lot of news outlets are confused, and it's good to be aware of that. It doesn't take that much money to move Bitcoin up by a huge amount, and even less money to move altcoins up, and the same way in the down direction.
So yeah, I mean, look, the other thing with that is, so that is specific to CoinShares, which is, you know, it's a easy way for institutional investors to get exposure into the market. And I think it's a decent sentiment indicator I've found in the past, but it's quite a small sample size. It's a very small fund, if you want to call it that. It's not really a fund. It's an electronically traded product, but not really an ETF. Also, yeah, so that's the other one to look at, is to look at what tokens is flowing into. So if you'll just call up call it up again, and then let's just look at where the money flow is coming into. Oh, I see you're on mute. So I think you need to unmute yourself.
Sorry about that. So here we have it. Yeah.
Okay, so let's look at where is the money going into. So I think if you scroll down slightly, you'll find, okay, there we go. So the inflows were 115 into Bitcoin. 115 was into Bitcoin, and then withdrawals from the rest. So the majority of the money in this case, as you can see, is going into Bitcoin, which is showing you that the institutional capital that's coming in here, they're not ready to trade altcoins yet. They're only ready to trade Bitcoin. And if you compare that to what's been happening recently on the Bitcoin dominance chart, which is over here, you can see that it's telling you exactly the same story. So I think we're at the first part of the cycle where everybody, but specifically institutions, because we know that this specific cycle is being driven by institutions. The inflows here are going straight into Bitcoin and not into the altcoins yet. So part one of the cycle. Part two, they'll go into Ethereum, because that's what always happens. When they have confidence in the market, they start to spend their profits into Ethereum. And then part three, large cap altcoins. And then if we're lucky enough to get a part four, we'll get the small cap altcoins or some kind of new narrative. That's pretty much how I see the flows. But I think the positive thing is that we've got the money coming into Bitcoin. And that's the beginning of every cycle. The beginning of every altcoin cycle or super cycle has been exactly that. It's been money flowing into Bitcoin and the dominance going up. We remember this from 2019. We remember this from even 2017 before the bull run. We remember all of this. This is exactly how it starts. So for me, that's another bullish, positive sign. And then, I mean, one other thing which is really bullish for me is that when I look at, I think it's this tweet of here, I'm trying to find, here we go. So this is this is 𝗂𝗂𝗏𝗏, but he's talking about the realized price of Bitcoin. He's saying that, the short-term holders were at a cost basis of 18.9, and the long-term holders were at a cost base of 22.3, and somewhere in the middle, the net realized price of Bitcoin, we're above the net realized price both on the short-term basis and a long-term basis. When that happens, it means that people are in profit. When people are in profit, they have more confidence. When they have more confidence, they start to invest their Bitcoin money into altcoins. And so really, if you do believe the cycle, we're in part one of the cycle now, and watch the signs, watch the money start flowing out of Bitcoin and into altcoins, because that will show you that we're moving to part two of the cycle.
Yep, I like that actually, because I see that happening when you look at Bitcoin dominance, which is, as you've heard from me before, saying it's a bit of a joke. But over the last 90 days, it looks like a score of 27. Looks like Bitcoin is dominating. But over the last 30 days, it's definitely altcoins are dominating, where I think 2/3 of altcoins, the top 50 or top 75, have outperformed Bitcoin just over the last month, which is stunning. With the exception of a couple of interesting names like Ethereum, Monero, Chainlink, they've just sucked compared to Bitcoin, which is very unusual. Normally, Ethereum outperforms, and that doesn't bode well for the future.
I'll tell you in a sec. So this is Mohammed Al-Arian. He's just read the CoinShares report that we read, and he says 2 takeaways from the notable inflow into digital asset product reported by CoinShares. It is consistent with the recent general loosening of financial conditions and the associated increase of risk taking. It displays greater differentiation by investors in Bitcoin. So what he's saying is that Bitcoin is almost like an over-leveraged play to risk assets. As soon as we go risk on, Bitcoin is going to fly. That's pretty much what he's saying. And to me, I think we're going into a risk-on environment now. So.
Yeah, Mohammed is very good, but something happened this week where he started saying, "Oh, the Fed are going to do 50 basis points." I don't know where he's getting that from.
He actually wrote a case. He's kind of saying that Powell should go all in upfront and then have the option to reduce as opposed to not have it while the economy is in such a good position. And I think the economy is in a reasonably good position compared to what could have happened, if you know what I mean. So yeah. Anyway, listen, let's degen, because I don't know about your channels. On my channel, there are a bunch of degens. They couldn't give a shit about macro. They couldn't give a shit about Bitcoin. They want to degen. So let's degen. Let's talk about altcoins. You spoke about Ethereum. Ethereum has been an underperformer, right? Any guesses as to why Ethereum has been an underperformer?
I think people are afraid of Shanghai, the lockup impending in March, which could bring about a sell-off. Plus, I go back to the same theory of looking at technology, and this would be a good one for you, CTO, too, is when you look at all the, let's call them legacy players, layer ones that have been around for 5 years plus, how can they compete with the murderers of modern technology and scale and speed and integrated technology stacks that are coming to bear right now? That's the big question I have. And you saw a lot of Cardano whales who've been dumping on retail. Well, they've been dumping on retail for years and years, but they did that as well over the last couple of weeks. I think you mentioned that earlier this morning, Ran. But I'd like to pose those 2 questions. One is, what's going to happen to the legacy players? Are they toast, or can they survive? And second, what will happen to the I just got distracted there. To lost my train of thought completely. Sorry about that.
I want to just jump in. I just want to just jump in here and just say, often in technology, it's not the best technology that wins, but it's the technology that gets the network effect first that wins. Now, what I'm seeing is that clearly Ethereum has network effects. It was the first to get network effects, and it became the home of many, many side chains and layer 2 scaling solutions, which are much better than Ethereum. Now, I think that what Ethereum has done by doing that is it's created a scenario where you have a mother chain, and then you have all the best innovations coming out in subchains or side chains or scaling solutions and whatever else. And by doing that, it will probably remain, in my mind, the #1 smart contract blockchain. I don't see a Solana or an Aptos or any of those beating Ethereum at this stage of the game. Larsson, I'm interested to hear what you think, because you're a telecoms man and you understand network effect better than anyone else.
It's a very interesting subject. And I think there are, as you say, learnings from other technology. And telecom is a good example because it's very similar. There is a huge network effect. Even more, here we're just talking about software. People just need to update their wallet. In telecom, we had put physical devices in everyone's pocket and built 1 million towers all over the world with one technology, and then we're trying to change that to another technology. And it turned out very difficult. So first we had 2G. For those of you who are very, very old, you remember we had 2G. Then we built 3G, which was much better, radically better than 2G. But it was never better enough to become the biggest technology. Never. 10 years later, 2G was still bigger than 3G, even though 3G was much better. But it wasn't better enough. It was only when we built 4G, which was even radically better, that 4G became the biggest technology. And I think we will see a similar effect here, that it's not enough to be a little bit better. It's not enough to build twice as good Ethereum as Ethereum. That's not enough. Because of the network effect, right? You have to be at least 10 times better in everything. Not only speed, capacity, but in usability and feeling of safety, security. Is it like reliable? You have to be 10 times better in everything, at least, maybe 20 times better. Then I think it can be replaced. I'm pro innovation. I'm a believer in innovation. I think that just because something was first, it doesn't mean it can't be replaced. It's just difficult to replace it. And the thing that succeeds to replace it is going to be radically better. And could something like one of the new blockchains that is newer, like Solana or Aptos or whatever project it is that is newer and has a better scalability and so on, can they ever replace it? Yeah, I think they can. I think it's possible, but maybe they're not there today to replace it today, because there's maybe not a feeling of reliability in the same way as in Ethereum. We all trust Ethereum maybe more, that it won't stop or there won't be some issue. But over time, I don't subscribe to the idea that the thing that was there first has to always be there. And I think even with Bitcoin, which is like swearing in the church, I think that it's possible at one point to replace it with an even better cryptocurrency that is even more reliable and even more trusted. And the same thing for Ethereum, which is today the leading smart contract platform. I think one day it's going to be surpassed by something else that's even better, even more adopted, even more reliable, and even better. And it has to be 10 times, 20 times better. But at one point, I think it will happen.
I mean, I think I agree with you on Ethereum and technology in general, but I'm going to disagree with you on Bitcoin. And I'll tell you why I'm going to disagree with you on Bitcoin. Because if you see Bitcoin the way that I see Bitcoin, as a digital store of value, which is, for me, Bitcoin is a digital gold. It's never going to be a payments. I think that Lightning and whatever else, maybe not, but that's not why I'm invested in Bitcoin. I'm invested in Bitcoin because I'm believing it as a digital gold and an inflation hedge. Now, for that, you don't need better technology than there is, because all you need to do is to be able to transfer when you want to transfer at a reasonable rate, and to be unconfiscatable and whatever else, and to have network effect and be accepted. So that's the main thing that you need, is you need network effect and to be accepted. And I think from that point of view, I don't see Bitcoin being overtaken until the next monetary cycle, so to speak. When it comes to Ethereum, it's different, because their performance is, mass adoption and performance are highly required. So when we talk about money, I think that money is going to be part of Ethereum, and specifically part of Ethereum layer 2. I don't think it's going to be part of Bitcoin. I think the improvements in cash and payments and money are going to be part of Ethereum and Ethereum layer 2. And then there may be a gap for things like Near Protocol, Aptos, Sui, Solana, etc., etc. But I don't think that that's going to happen on Bitcoin. I don't think it's going to happen on Bitcoin. James, what do you think?
I agree. Bitcoin is a special. That's why I don't believe in the Bitcoin dominance index, because it's comparing apples and oranges, and they're fundamentally very different. I'm all about, and I always have been, the reason I jumped into Ethereum when I did way back when was because I was looking for TradFi disruption. And I believe that will come from layer 1s, maybe layer 1s plus layer 2s.
Okay. What about this layer 1, which is now being priced at $16.7 billion fully diluted? Ladies and gentlemen, I present to you the most valuable layer 1 in the entire world behind Ethereum. Aptos.
Exactly. It's even higher than Cardano, which is 16.7. Avalanche 14.5.
Imagine being able to invest in a token that really has built nothing to date, hasn't really built a community, and has a small token supply, so it's easily manipulatable. Ladies and gentlemen, I present you with Aptos. Crowd goes wild.
Yeah, you know what's really strange is when you look at the relative volume traded over market cap, it's still super thin. Like
no, the volume is bigger than the market cap. The volume traded is bigger than the market cap every single day by multiples because of the Korean Degens. Let me show you. It's absolutely crazy.
Okay, so that's been pumped. All right.
It's absolutely crazy. You won't believe this. Okay, so look at the volume over 24-hour volume in this case is 836 million. You take volume, you divide it by market cap. Yeah. It is 40. Is it 40 times? It's 400 times.
Wow.
Yeah, 300 times the market cap. It's been happening like this all day. Now let me show you something now. Click sort by 24-hour volume. Who's trading this? 𝗵𝗏𝗃 Korea. The majority of the volume in the last 24 hours has come from 𝗵𝗏𝗃 Korea.
So the Koreans are degenning into Aptos and they're controlling the whole market.
Correct.
And the question is, what happens if other parts of the world follow too late? They're going to get toasted.
The West always follow or are following Korea this pump. If you look at all the tokens that have pumped in this cycle, not all, but a lot of them, the majority of the tokens that have pumped, the pump has come from 𝗵𝗏𝗃 Korea, which is, we know, it's a bunch of Asian degens who are much more degen than us, than the Western Westerner degens. And you know, these guys are trading 100x leverage, where we're trading 10x. I don't know if you ever watched those Korean streams where the streamer live streams with music and he's trading on 100x leverage. Actually, if anybody in our research group is watching this, drop me a link. I actually want to show the guys how crazy these people are. But right now, they've got a hold of Aptos. And what they're doing is they're pumping up the price of Aptos like crazy. It went up to $20 today. That makes Aptos valued at $20.5 billion. You understand what that means, right?
Yeah, it's insane.
Yeah. Look, positively, for the first time, this chart's actually broken down, which hasn't happened yet. Maybe this is the beginning of the real repricing, and then they'll leave us alone. Also, tomorrow in Korea, there's an Aptos hackathon. And usually we know what happens. There's a big build-up to the event just before the hackathon, and then on the hackathon, on the event, it comes all the way down, right?
That's interesting. I'm just trying to check out the daily active users on Aptos. I think it was last time I checked, it was about 20,000.
Oh, it's insignificant. It's
so you divide 20 billion by 20,000. That's a fun number.
Yeah, I think I have it here. Hold on. Let's just okay, let us in. Let's quickly I'm looking at Solana, but let's compare it to Aptos. So daily active addresses on Aptos is 18,500. Whereas if you compare that to Solana, 457,000, Ethereum, 400,000, Polygon, 350,000. Near 69,000, Avalanche 33, and Aptos 20. Look, it's screaming short. I took the short. I took the short. I just couldn't watch it anymore. You know, it's one of those things where eventually you realize that I think I can stay solvent for longer than the market can stay irrational here. I think so. I hope so. Because otherwise I may not be here next week. You may be doing a DCA on your own without me, because I would have been wiped out. But I have taken the Aptos short. I just think it needs to be repriced. I think my price target is a maximum of $12. But you know, I can't justify Aptos being much more than Solana and everything else. Hold on, I think my research team's found us something. Yeah, I'll show you. This guy lost 600 million. Hold on, let's quickly just.
보기 편안한 이상과 좋은 이상, 잘생긴 얼굴을 갖고 있다. 야, 월드브로 마이페이스, you thinking 마이페이스 핸섬? 아시안 코리안 페이 먹습니다. 저는 받은 만큼 돌려줘요. 저 이런 거 100king 못 먹어요. 저는 솔직히 그래요. 저는 만약에 이런 금액을 청산당하면 바로 침대에 가요. 조용히 야동 한 편 보고 자기 일로 한번 손절 같은 거 몰라.
Yeah, okay. Oh, he's gone low. He's gone 25x this time.
아 진짜 공포 줄 만큼 줬고 진짜 롱
But this is the
청산시킬
culture.
만큼 청산시켰다. 이제 가야 돼. 아 여기까지.
When you're betting against the Koreans, that's the culture you're betting against. When these guys are longing and shorting, that's the thing. I watched them on an FOMC meeting one night, leveraging at 100x leverage on the FOMC meeting.
Yeah. 𝗏𝗏 is amazing to watch. Amazing to watch.
Let's talk about layer 2. Let's talk about layer 2s. Let's talk about Ethereum layer 2s, because there's a massive ETH layer 2 narrative building. This year we've seen Optimism, we've seen Metis, we've seen Matic. In fact, let's quickly go to the bubbles and just quickly go. Let's try and get weekly. Let's see if we can see what went up. Mina Protocol. Yeah, there's a massive layer 2 narrative. James, Anders, are you guys investing in any layer 2s?
I had a big dig into the layer 2s as well, because I always thought, number 4 best platform, which is layer 1 related, was Matic. But now with things like Arbitrum and Optimism coming, it's changed the whole game. So I think there is a Matic killer, and it goes by the name of Arbitrum, especially when you look at metrics like TVL and adoption. It's going bombastic, and they don't even have a token yet. So
I agree. I just want to raise a concern around Arbitrum. So Arbitrum is an optimistic roll-up solution, as is Optimism, right? And I think when you compare optimistic roll-ups to 𝗁𝗀𝗃, I think 𝗁𝗃 is a better, faster technology. Am I right? You're nodding your head.
No. It's different. Optimism is an optimistic architecture, optimistic roll-up, but Arbitrum is a virtual machine architecture, which is different. Okay. It's like Polygon. So that's why I think Arbitrum has legs to be a Polygon killer.
Okay.
It's better, cheaper, faster.
I think what Matic are doing is that they position themselves as the protocol that does any type of scaling solution. And they're not talking a lot about 𝗁𝗃.
Yep. And they had the Hermes acquisition, etc., which is like nobody's using, which is quite disappointing. So who knows where all this 𝗁𝗃 proof is going to go? But I don't know. It's strange, and I'm not a big fan of layering in all the complexity around Ethereum. We had this conversation last week on your channel, CTO, remember? And it's just getting too tricky.
I feel it's complicated. I don't like complicated. I feel that, I don't know, I don't like any of the solutions. I feel it's too complicated. They're not there with usability. Most people are not using it. Most people are still on layer 1. And I don't know, I'm going to, of course, watch all of them, see if any of them actually start picking up any steam. But I'm not sure. I feel they're not there yet.
I want to correct you there. You say most people are on layer 1. That's not the case at all. So actually, there are many more users on the layer 2s. So if you look at Ethereum has 470,000 daily active addresses. Polygon has 327,000. And then you add that Optimism and Arbitrum and all the other stuff. And actually, the layer 2s are now settling more transactions than the Ethereum layer 1s. So for me, it's definitely going to be a lot of layer 2s. So for me, it's definitely going to be a lot of layer 2s, and there are going to be quite a few winners. Like I think Starknet is coming out later on. Arbitrum is going to launch a token. I think there's going to be multiple of these layer 2s, and I think these layer 2s. If you can get in on a layer 2 and you catch the right layer 2, I think you're going to make a lot of money. But getting in is, right now, a lot of them are airdrop related and stuff like that. The only way to get in is...
But say Polygon Matic, it's not really, I mean, they're marketing themselves as the layer 2, but the Matic network isn't really layer 2. It's like another network calling, okay, it's a side chain, but okay, then so is Solana a side chain to Ethereum. But I know, I mean, I don't have the data in front of me, but I mean, doing transactions on Polygon Matic isn't really a layer 2 on Ethereum.
Yeah, the other thing goes back down to is friction. and cost and finality. And this is where the layer 2s bring about a lot of problems, as well as, of course, attack surfaces as well. So it's just massively complicated. And again, also incredibly competitive. So picking the winner is hard, but if you follow the users, follow the TVL, it's all pointing to Arbitrum right now at this stage, in my opinion.
Yeah,
okay.
I think following where the users go, maybe one of them really wins big and picks up the huge traction. Then I'm gonna follow that. But I'm just saying, I'm not sure which one it is. I think Polygon has done an amazing job at business development, but they're doing it on the Matic network.
They are the number one. They really are the number one in business development. They're number one in business dev, and number one is marketing. And when you combine the two of those, that's where they've become really, really lethal.
Yeah, and they've gotten. I mean, valuation is pretty good. It's gotten reflected in the price also.
Sure. All right, let's go. Last thing for today. Let's talk about AI. I see a lot of AI narrative in crypto.
I'm so excited, and I have to market one thing. If you haven't seen the video I posted this Friday on my channel, I'm not going to spoil it. I'm not going to spoil it if someone hasn't said it. But if you're like remotely interested in AI, go watch the video, which has titled Aptos. It's like it talks about Aptos at the end, but the beginning, it's about Aptos, but it's also about something else. And would you agree, Ran? It's worth watching.
It was so smart when you did it. It was so smart. I must say, in the beginning of the video, I was like, "What is Larsson doing? Like, how is Larsson doing it?" And then I think it was really a cool video, really, really good video. Yeah. I'm excited about AI. I don't know if I'm excited about the crypto AI plays. I mean, I think AI is in its base layer. I'm very excited about the future of crypto on AI. But I think when I look at the crypto offerings that we currently have, I don't know if they're the safest place to put your money at the current valuations. Like, you look at, things like Fetch, Ocean Protocol, Singularity. I don't know. It's too rich for me. Don't know how you guys feel about it.
But,
James?
Yeah, I did put one of the AI plays in our portfolio, remember, on December 12th?
Which one was it?
Ran versus IA. GRT.
Okay. Look, yeah. I mean, graph is more data indexing, and I get that data indexing ultimately is an AI play, but the graph is not really
exactly. So this is what all the crypto companies, they're changing their branding to jump on the AI bandwagon, which like storage was big, what, a year and a half ago. You remember that time? Everything is all about storage. The other ones interesting to look at is, of course, Fetch, you mentioned, and Ocean. They'd be my kind of top three, but they're all very risky. And tokenomics is far from perfect.
Yeah, AI is very risky. I want to show you, I've just discovered a gem. If you go to CoinGecko and you click on the Aptos ecosystem, right? What you get is the whole Aptos ecosystem, as you can see. That's it. That's the page 1 of 1. That's it.
And if you go to Twitter and look at their slideware, you have these huge.
Okay, people are going to say we're salty and we've just missed the pump, and that's why we're saying that. But I mean, if you compare that, like, even if you compare it to Cardano ecosystem, like when you click Cardano ecosystem, like there's an ecosystem, there's something. I don't know. Anyway. All right, listen, guys, I think if there's nothing else, I don't see any news breaking. Is there anything breaking on your side? Anything else? All right, amazing. So we'll see you guys next week. Next week is on James' channel, right? And we're back to our normal time.
We'll rotate normal time again. Okay, 8 a.m. Pacific.
Yeah, I think so.
Awesome. Good stuff.
Cool. I'll see you guys again next week. Until then,
thank you, everybody.
Trade well.
See you later.